gives me great pleasure to welcome Oliver, who's going to put a little bit, as I say, detail around that in terms of the economic kind of impact of some of this. Oliver, the floor is yours, sir. Give him a big, warm, multimodal welcome. Thank you.
Yeah, thank you very much for the kind introduction, Peter. So my name is Oliver Kolodziejka. I work for Colliers International as a senior economist. So I monitor the global economy, the UK economy, what does it all mean for commercial property, also for logistics, for different industries. So today I'm going to be talking a bit about the global economy. Where are we? What's the state of the global economy? But what's also the state of the UK economy? You know, what does Brexit mean? I'm trying to mention Brexit not too many times. I'm sure you're pretty bored of that already. But it's obviously quite an important factor. So if we just start with the first slide on the global economy. So global GDP growth actually accelerated last year. It was the highest in 6 years, reached 3%. A lot of positive headlines around that. There's a few drivers for that. So actually global inflation was actually fairly low last year. I know it peaked in the UK, but on a global basis, inflation was fairly low and supported consumer spending, especially in Asia. In India and China, inflation fell to decade lows. Even in Japan, turned negative. And that had a big impact on the global economy. Another big factor was also global trade. I'm going to have another slide after that, I think, that shows that global trade flows accelerate quite significantly as well. Again, a lot of that was driven by Asia. Now, if we look at some of the major economies, what happened to GDP between 2016 and 2017? So we can see that in most regions, GDP actually accelerated with only 2 exceptions. One, the UK, Brexit, and one, India as well. So in India, they had the demonetization late 2016. They introduced a new sales tax in 2017, and that had some negative effects on the economy. But we expect quite a big rebound in India this year. China actually accelerated. I think it was a bit of a surprise to a lot of people, to a lot of economists. I don't think anyone actually saw that. The Eurozone is performing pretty strongly. Monetary easing playing a big part in that. As I mentioned, so global consumer price inflation was actually fairly low in 2017, around 3%. If we compare that to pre-crisis levels, where it was around 4%, then peaked at around 6% just before the global financial crash. That supports consumers. Industrial production also accelerated last year, which drove global growth, global trade growth, sorry. And then the stock markets are actually performing fairly well as well. If we look at global equities, they reached an all-time high before slowing slightly at the start of 2018. However, that 3% growth in 2017 is actually still fairly subdued if we compare to where we were before the crisis. So you can see before the crisis, in those years here, global growth of 4% was nothing new. It was the normal. It was the norm. And now, we reached the highest level in 6 years at 3%. So just to put that in a bit of a perspective, although we reached a 6-year high, if we compare to the longer-term trend, the global economy is still in a fairly subdued state at the moment. And a lot of that was driven by monetary policy, low consumer prices. So it's not really sustainable, unfortunately. And I think what we can expect for 2018 is certainly an acceleration in the US. The new tax reform that Donald Trump introduced. There might still be some infrastructure spending. And that will definitely lead to an acceleration in the US. If we look at other countries, China will probably slow down a little bit, as we were expecting for the last 2 or 3 years. But I think Asia as a whole will probably keep up fairly well. In the UK, that's a bit of a different story, which I will come to in a minute. Just a bit more on world trade. So these are global trade flows. It's just merchandise trade, so it excludes services, which account for actually half of all global trade. But this just to highlight how important trade was to support the economy in 2017. You can see an uptick there, 2017. It's an upward trend. And I think we reached around 4% annual growth in global trade, so very important for the global economy. However, we can already see that there's a slowing at the start of 2018. So what I've done here was I plotted a data set from the IATA, which is global air freight. I plotted that against merchandise trade. You can see the blue line acts a bit as a lead indicator. So global air freight, lead indicator of actual trade volumes. If we just look at that, it looks like global trade will still be fairly strong, but definitely slow from the levels that we've seen in 2017. If we turn to the UK economy, I'm sure a lot of you guys are aware of what happened to GDP in the first quarter. Unfortunately, I finished the presentation before then, but you know, the UK economy almost stagnated in Q1. Quite negative headlines around that last Friday. But what I think and what a lot of economists think and say is that it was only a temporary blip. So we all remember the snow-related disruptions that we had in the first quarter. You know, retail sales plummeted, industrial production stopped, a lot of shops closed down. And if you actually look at the underlying data in the GDP figures, you can see that construction had quite a detrimental impact on GDP. So it actually subtracted 0.2 percentage points of GDP. You know, for an industry that's only 6% of the overall economy, that's quite significant. And again, construction is you know, fairly exposed to weather. So obviously, if it snows for 3 or 4 days and you know, the builders can't get to work, then it has a massive impact. That's what we've seen in the first quarter figures. However, if we go back to 2017, it was a fairly you know, subdued year as well. Weak GDP growth in a few years. And then the question that I always get asked is it all because of Brexit? You know, does Brexit have a positive or negative impact? The answer is both. You know, it just depends on what your business is. You know, as Peter was saying, if you're an exporter, the pound devalues, you can export more. You know, people will buy more from you because it's cheaper. On the other hand, if you rely on the import of commodities in dollars and the pound devalues, then your imports will become a lot more expensive. And what do? Do you just accept a fall in your profits? Do you pass on those higher import costs to your clients? So it's quite a tricky situation, you know, if you're a commodity importer. So I would say it had a bit of a positive impact, but also negative impact at the same time. For consumers, certainly a negative impact because higher import costs means higher consumer prices. So I can buy less with the money that I have. Yeah, just to highlight that in 3 charts. So on the left, we can see wages and inflation. And that's actually a fairly positive story in 2018 because for the first time in over a year, there's actually a return to real wage growth, which means wages are rising at a faster rate than inflation. Now that hasn't been the case in 2017, which means consumer spending you know, was fairly weak in 2017 because real wages were falling. Now what does that mean for retail sales? So the chart in the middle plots real wage growth and retail sales. And you can see that as real wage growth goes down, so do retail sales. I mean, it's a fairly easy example. You know, you have less money to spend, so you buy less. On the positive side, though, we can see that the return of real wage growth should, in theory, lead to higher retail sales this year. And we expect that to come through in Q2 and then in the second half of the year as well. So the retail sector, the consumer, should support the economy this year a bit more than it was the case last year. Industrial production is fairly volatile industry. Actually, this morning there was UK manufacturing PMI out, and that actually was the lowest in a year and a half. So it was against expectations of a bit of a recovery following a weak month in March. So at the start of the second quarter, you know, the industry, the production sector is actually still in a bit of a struggle. Now, if we look ahead, what do the forecasters say about the UK economy going forward? And it's a fairly mixed picture. So if we look at 2019, as I call it, the range goes from not too bad, which you know is around 2% from capital economics, to actually not too good. So the OBR, they actually only expect 1.3% GDP growth in 2019, which would be even weaker than last year and weaker than this year. Now at Colliers, we think that's a bit too pessimistic. And the reasons are that we do expect real wages to grow again, supporting the consumer sector. And we think that, I mean, the consumer accounts for roughly 65% of overall GDP in the UK. So stronger growth in consumer spending will lead to stronger GDP growth. However, the OBR, I mean, they have some pretty good forecasting models in place, and I think, they're generally a bit more pessimistic than they probably should be, but I think there's probably reasons for that as well. Another point that I wanted to focus on are the latest borrowing figures. So government borrowing was actually the lowest in a few years as well, which should give the Chancellor a bit of wiggle room to support the economy should he need to. Nothing was announced in the spring statement, but we do expect a few more announcements in the autumn budget, which is later this year. This is what the forecast looks like against the history of GDP. So if we actually reach 2%, that's actually not too bad, especially in the global context. That puts the UK economy actually right up there, which you can see on the next chart. So what I've done here was I just looked at GDP growth between 2017 and 2022, just cumulative, so not the annual rate, but the actual absolute change in GDP. And this is the forecast from Oxford Economics. And the UK is actually doing pretty well there in the Western world. The US is expected to grow slightly stronger, but a lot of that is just due to stimulus, the tax reform, expected infrastructure spending. But the UK is actually expected to grow at stronger rates than Canada and then the Eurozone, France, Germany, Italy. So the UK is actually expected to outperform all of those countries. So despite all the Brexit uncertainty, the outlook is actually not too bad. What does it mean, though, if Donald Trump introduces trade protectionism, if we are not part of the European Union anymore? What does it mean for trade in the UK? I'm sure a lot of you are aware that we have a big trade deficit with almost every single country in the world. The UK trade deficit has fallen a little bit last year, but it's still quite significant. However, there's one big country with which we actually have a trade surplus, so we export more than we import, and that's the US. But what's going to happen to that in the next few years if there are protectionist measures? I think it will have quite a big negative impact on UK trade. So the trade deficit is expected, to widen even further. On the other hand, if we think about a Brexit deal with the EU, you can see that with a lot of the EU members, such as Germany, Netherlands, and France, the UK is actually quite a big trade deficit, which means for the European Union, it wouldn't be very beneficial to have trade restrictions with the UK because they export a lot more to us than we import from them. So for the European Union, it would be a lot worse than it would be for the UK to have a lot of tariffs on imports and such. But again, there will be a transition period for 2 years, so not a lot will happen until after that. But I think there are certainly some risks with regards to trade. Now, certainly also some opportunities, but especially with the US and Donald Trump, there might be some negative trade headlines in the coming months and maybe even years. And I just want to scratch quickly on what that all means for the logistics industry. So I just focus on 4 different key messages here, or key points. The first one is changing customer experience. So, customers are expecting faster, cheaper deliveries. It's a changing world. If we think back 10 years, the logistics industry and the delivery industry was completely different to what it is now. You can order something now and it will be with you in a few hours, and that will change even more, with the introduction of drones and stuff like that, and the last mile delivery. So there's a lot of changes going on there, which also leads to new technologies, technological breakthrough. Again, there's a lot of headlines around artificial intelligence, Industry 4.0. How will that all shape the logistics industry, and how will it all change it? And I think it's a massive opportunity for companies. And I think the goal here is not to fall behind, because you get a lot of new market entrants, a lot of startup companies that are familiar with all of the new technologies. And I think it's key for existing logistics companies just to adapt to that as well. It's a lot of opportunities. You can obviously improve efficiency, you can improve costs using all of those new technologies. But I think it is important to actually make use of them, to educate staff in order not to fall behind. I mentioned new entrants to the industry already. So a lot of startup companies, entering the logistics market actually. They are the likes of, I think it's called Uber Van or Uber Cargo, where Uber is actually offering some van services now, and they offer express deliveries. Startups like that, they will enter the market, even more and more and more as new technologies evolve. So it's quite crucial just to keep up with that. I'm going to mention Brexit just one more time. It's the end of my presentation anyways. So Brexit again presents, I think, both opportunities but also challenges. Now obviously if we're not part of the single market anymore, times at customs will go up exponentially. There will be a lot more checks at customs. It will lead to longer delivery times, which means costs will probably go up for the clients. But at the same time, it offers the opportunity to create new operating systems, new strategies to pretty much overcome those negative impacts that we are expecting from Brexit. Whether or not it will be a net positive or net negative impact, I don't know. I don't think anyone does. What we're trying to do is just to educate our clients, to explain to them what the challenges are, what the opportunities are. But what the actual impact will be, we won't know for another few years. So that's me done.
Brilliant. Thank you very much.
That's all right.
Thank you. Thank you, Oliver. Is this on? You can hear me? Good. That was great, Oliver, and there's some interesting questions all coming on. I didn't realise actually. Here's your Slido access information. So we'll move swiftly on to our next speaker, real European panel this morning. Don't read too much into that. It's just coincidence, I guess, more than anything. But our next speaker, Pierre Ligori, interesting colleague of ours in UKWA. Pierre runs a supply chain and logistics consultancy based in London. He's French, of Italian parentage. He has a very interesting view of the whole European piece and in fact, the global business that we're in. So please give a warm welcome to Pierre Ligori.
Thank you. So I think we had some very interesting information from Peter and Oliver. And I will try here shortly, because I think the most interesting part will come from the questions and answers. I try to shortly highlight or translate what it means for logistics and especially for the warehousing industry. And instead of speaking about Brexit, I've decided more also to add another pattern, which is Industry 4.0. You hear all the time speaking about this new concept, and I wanted to highlight this issue. Shortly, we are a logistics consulting firm. We address two different types of customers: industrial manufacturers, providing traditional supply chain consulting, and for third-party logistics, we provide digital sales and marketing solutions. Obviously, if you want to know more about our company, you can visit our website. Industry 4.0, what does it mean? This is the next supply chain revolution. Maybe it's not visible yet from a warehouse perspective or a third-party perspective, but this is really the next revolution. Why? Because Industry 4.0 is here to better connect innovation, technologies, humans. What does it mean? It appeared in Germany. It's really considered to describe the fourth industrial revolution for manufacturers. In fact, as a translation, Supply Chain 4.0 or Logistics 4.0 is also a translation to move to a smart logistics and transportation, enhance S&OP, sales and operations planning, and dynamic supply chain networks configuration, because everything will change. The disruptive factor, this is real-time data. Big data, as you can hear or read everywhere, is a clear disruptive factor. Why? Because now we have the ability to analyze real-time the customer data, which was not the case before. As Peter said, now you have people who are consumers now can shop online 24/7, and now companies are able to analyze real-time this data. What does it mean? The world is changing, and it will continue to change. The speed of change will also accelerate, and so we are in a world of permanent change, of uncertainty, and of customers' demand and predictability. It's more and more difficult to predict the customer behavior, because simply behind the screen, being able to shop online 24/7, it's extremely hard to anticipate everything. And also another pattern is that you see that now products have a shorter life cycle. I used to work 25 years ago for Reebok. I mean, we were just delivering 2 seasons a year, and the life expectation of the expectation of life of this product was 6 months. And it was already extremely challenging because 94% of the products would disappear at the end of the season. Now you know that, I mean, it's 1 month, maybe sometimes a week, and if the product doesn't go well, is not selling, then it's replaced by another one. So it's extremely challenging, and again, it goes much more quicker. And what does it mean? Real-time impact on supply chain. Supply chain now, I mean, if you can analyze in real time the data, that means that you can adjust your forecast in real time, which means you can challenge also your warehouse transport capacity, you can optimize your transportation capacity, your warehousing capacity, also real time. You can permanently change your priorities. You can also permanently reconfigure your supply chain networks to be closer to your customers. So that's something extremely challenging for the logistics and the warehousing industry. So we are moving slightly with Industry 4.0 from a traditional supply chain model. I will not describe what it is, you know that. I mean, we plan, and then we develop the product, we plan, we produce, we deliver. But now, everything is connected, so we are moving now to a digital, more digital supply networks where everything is connected. This is where we say connecting ecosystems. Number one, you know SAP, you know all the ERPs. With the new ERPs coming on board, then it will enable real-time planning adjustments and also smart S&OP, because we've embedded artificial intelligence. These schedules will be not only recalculated once a month, but real-time, which means you can then adjust permanently your schedule and fix new and give new priorities. In terms of footprints, I mean, in terms of operations, the way we see it, you heard about global logistics, then regional supply chains and so on. It's going to be much more decentralized, but connected operations footprints. And so the challenge for the warehousing industry is actually to move from a traditional distribution centers scenario to a no warehouse concept. So you may think, well, this person is absolutely crazy, no warehouse. Of course we'll need warehouses. I don't say there won't be any warehouse anymore. But we'll be in a no warehouse concept, which is different, and I will explain you why. In fact, because everything is interconnected, we will need more warehousing space, but we will use it in a different way, okay? So if you think it's not going to happen, I will just give you 2 examples. Remember Kodak, okay? They did not believe in digital pictures. They disappeared. Remember Toys R Us. They are going bankrupt. Why? because they did not believe that people could buy online toys from their living room. Okay? They did not believe in e-commerce. And so they just thought that people would continue to visit their stores and buy toys. And they're about to disappear too. So it's not so stupid to consider that maybe some concept may succeed. And what does it mean? Number one issue is you see this graph here. It shows for warehouses. That's a French picture, but it's quite relevant in Europe. I mean, for 5,000 square meters plus warehouses, you see that actually you have 41% of these warehouses that are used less than 80% of their capacity all the time. You see also that here, that's the number of trucks that are driving empty, and the red line, it's close to 20%. So in Europe today, you have around 20% of trucks that are driving empty out of the overall capacity. And only for these 41% that are used less than 80% at their capacity, the cost for the operating cost account for more than 200 million euro a year for France alone. So that's a significant impact, because you know that when you're a retailer, when you're a manufacturer, you want to decrease your operating cost. And if you don't use properly the capacity, that is just an added cost to your P&L. One thing important to note is also the issue is that the population will continue to grow, as Peter said, and only in the UK, we know that there will be 10 million people more in 25 years. And combined with the expected global trade growth, that means that the situation, there is a need to build new warehouses, but also it will put some more pressure on the warehousing systems. So what is the no warehouse concept? In fact, we interconnect and automate multi-users warehouses. You know we are in a permanent change, which means that you can no longer continue to have a distribution center that will last 5-10 years. I mean, again, coming back to my Reebok years, I mean, we were used to consider that a warehouse could, a new warehouse in Rotterdam, 50,000 square meters, could continue 20 years, which was the case. But it's changing now. So permanent change means temporary storage solution, temporary warehousing concepts, which means that you only need, as a manufacturer or retailer, you need just to have a warehouse which is well located, which is part of international networks, and that is obviously more automated, because you need also to decrease your operating cost. You know that in the warehouse, most of the costs are coming as well from the manpower. So you need to really develop smart warehouses. And the challenge here is to bring the inventories closer to the customers, because I'm a shopper online. I don't expect now to be delivered in 3 or 4 days from now. When I place an order, I want to be delivered next day, and sometimes same day. So I need to have the inventories closer to the customers, which again comes back to this concept of no warehouse, where actually you will have temporary storage solutions with smaller warehouses which are closer to the customers. And the benefit of that is that you just have achieved better lead time and also volume allocation. Because you have visibility real time on the entire supply chain, you can maximize the capacity of transport and also warehousing, which then ends up to a network optimization. So in fact, we can see that we're going to have 2 types of warehouses, really. Higher standardization, of course, because you have these 2 types. Fulfillment centers in one hand, where you have highly automated warehouses to maximize the import coming from overseas. And also the last mile urban delivery warehouses, which are going to be smaller, but more flexible. And to implement, because we need to go quicker. I mean, I have this warehouse this year, maybe in 6 months from now, I need to implement a new one. So I will use more plug-and-play implementation methodologies, which means you go to a kind of more standardization. And also it means that if you were used to contract 3 years, now you're looking more for short-term agreements because, again, the warehousing footprints will change. This is where we end up to what I call the emergence of WaaS, which is warehousing as a service. And you know, for systems, it's SaaS. This is the concept of WaaS. The benefit of that is that it's proven you can use 10% plus space utilization, then operating cost reductions. One last, very last thing is the logistics workforce challenges. The key fact, it accounts for 8% of employment in the UK working for the logistics industry. 1.2 million additional workers are expected by 2022. And of course, you know that the current EU workforce will probably have an impact on the industry because of Brexit. I will not go deeply in that. But what we know is that in the coming 4 or 5 years, we will need less low-skilled workers and more high-skilled workers in the warehouse because of automation and all disconnected supply chains. That's a real challenge because we need to attract young people to this industry, and it's fairly difficult. And also, we need to train them. So, as we say in France, we are au pied du mur, which is just in front of the wall. So what are we going to do? Are you ready for change? There are threats, there are opportunities. Of course, you can become more collaborative and more transparent. That's a challenge, we know. The threat is to be able to adapt the traditional business model to supply chain 4.0. But there is a unique opportunity really to develop more multi-user warehouses with short-term lease contracts connected to international networks. And again, are you ready for change? I usually finish my presentations by talking about the story of the chameleon and the dinosaurs. You know, the chameleon changed its color and just adapt to their environment, and dinosaurs just disappeared. Thank you.
Take a seat up there, Pierre. Come and join us up the front here. The first question was actually about UKWA seeing an increase in the number of members considering setting up an operation in the EU. If I could just knock that one off straight away. No, not really. A number of our members are already there, some of the big multinationals, as you'd expect. And I think as a general trend, many of our smaller SME members are very much in wait-and-see mode. And it's our job through these kind of sessions and the information that we're sharing just to try and help those guys start thinking about the things that they need to be thinking about and maybe doing a little bit of preparation. Just on that note, before I come to the panel, can I just ask a straw poll around the room, how many of you are actually already preparing for Brexit? And how many are just in wait and see, haven't really done a great deal yet in their businesses? Okay, sort of fairly mixed. Okay, thanks for the presentations, guys. Really interesting. I think if I could put this first of all to you, Oliver. These are coming in as anonymous at the moment, but people will get more confident as the day goes on, and we'll know who's asking the question. Do you believe the economic conditions, alongside technological developments, in the UK and EU support or detract from nearshoring as a manufacturing strategy? So how do you see manufacturing? Pierre, you might have a view on that as well.
I mean, I think if we compare UK manufacturing to, for example, German manufacturing, it still accounts for only a fairly small part of the economy. I think in countries like Germany, it still accounts for roughly a quarter of overall GDP. And in the UK, it's obviously fairly centered to certain areas. I mean, obviously, London is just the financial center, similar to some parts in Scotland, actually. But I mean, I think manufacturing is changing a lot. I mean, Pierre was talking about Industry 4.0. That has a massive impact on manufacturing processes. And I think, again, it's just adapting to the change, not being scared of the change, as you were saying. So,
do you see any trend of manufacturing maybe coming a bit closer from, instead of it being traditionally Asia, China, coming back to Europe? I think that's probably what we mean by nearshoring. Pierre?
It depends also on the industry, I would say. I mean, for the low-cost type of industry, such as textile and so on, although you see some relocation somewhere. I mean, just in mind, Adidas, for example, relocated part of the production in using also 3D printing sometimes in Germany. But obviously, anytime there is a real complex industrial process, then you see that companies are mostly and high-value products or high-value processes. You see that the European manufacturers are actually taking more the lead, which is not so relevant anymore, because you can also just understand that China actually spend a lot of money in R&D, and so you see also, for example, when we speak about solar products, I mean, you cannot almost buy any solar installation that is non-Chinese,
Sure. One for you here, Oliver. Given that you think GDP weakness in the UK is just a temporary blip, do you think that the Bank of England should increase interest rates?
They should, yes, at some point. I don't think they're going to do it in May anymore. I know there was a lot of talk of another rate rise in May. I don't think that's going to happen anymore, just given the weak economic data. So I think they're going to push it out to a bit later in the year. Some of the forecasters say there might be 2 rate rises this year. I don't really see that happening anymore. So I reckon it's probably going to be 1, and then it's going to be a gradual process. But I do think there needs to be some form of monetary normalization, yes.
Okay. And one for you, Pierre. Where's it gone now? Hold on. This is about supply chain integration. Who benefits from supply chain integration on an international scale?
Are you speaking about countries or?
Well, let's take it from a logistics industry point of view.
Yeah.
Opportunities or risks? How do you see things going forward for the industry?
Well, that's probably what I was trying to explain in my conclusion, actually. I think the ones will take the benefits are the one who will embrace this change and really seize the opportunities. Obviously, I mean, it's unpredictable. I mean, the market is difficult, and there is a lot of uncertainty everywhere. So fear can be a definite feature of these days. But I would say we have a French sentence for that, saying that fear does not prevent danger. So it means that somewhere, I mean, whatever you do, if you fear or do not fear, there will be danger or uncertainty. So the ones who will survive on this market, and the ones who will take the benefit of what's going on the market right now, are the ones who will be ready to invest, to be more collaborative, to embrace this digital change. And this is not just a kind of fashionable item. It's really something, this is a strong trend on the market. So, or you embrace it and you're ready for change, and then you take the benefits. Or you just try to resist, but I think that being so defensive actually may end up to a decrease of the business, or sometimes simply disappear.
And another question that's relevant to this: how do you think automation will adapt to your WAS concept? What will traditional high capex, low flexibility, and high return solutions be replaced by?
The challenge is that warehouses are becoming more and more autonomous. I think that when you look at, I mean, you can read in the newspaper right now that warehouses, there is a lot of automation in warehousing and robotics and so on. But combined with artificial intelligence, you see already in the studies that a lot of warehouses are becoming more autonomous, more smart, and actually the warehouse will almost be able to react and to adjust by itself.
And do you see this within the world of Colliers International, Oliver? Do you see the shape of warehousing changing?
Yeah, I think the demand for a certain type of building is definitely changing, and we've seen that already, and we're expecting further change of that. You know, just what Pierre was touching on, smart warehousing. You know, the demand for that is probably going to go up quite significantly.
And that's that's a challenge for logistics service providers, because they need to, on one hand, to deliver the service at the lowest cost their customer expect, but also prepare the future and have the capability to invest in new technology, and also what I call the cultural change, which is not to push a pallet and have skilled people, but also to embrace also all this technology in the warehouse, which is
and I think it's important that we just a couple of words just on this automation thing, because I think there's a bit of a myth out there that we also need to dispel in educating our members, that this whole growth of automation and robotics is suddenly becoming a panacea to cure what both of you highlighted in your presentation, which is the skills and labour shortages that are coming, and somewhat exacerbated by Brexit as well, with the exit of the Eastern European labour. Could you just comment on your experience in this from an automation robotics point of view and its impact on the labour situation? It's not going to cure everything, is it?
No, it's not, because if you just consider you will invest in automation just to replace your workforce, you're going wrong. You're going wrong, really. Because in fact, what you want with automation is actually to remove the waste in your operation, which means the low added value of operations you want to run in the warehouse. And that's the reason why there is also a major shift on the workforce. We'll need less low-skilled workers, but we'll need much more high-skilled workers to actually monitor the supply chain, monitor this automation, this robotics, and also challenge supply chains on a daily basis.
Yeah. Any views from you,
I think that's
on
a
the
good
labour
point.
issue?
And I think, just from monitoring official data over the past few years, you can see that business investment was actually fairly weak, and R&D spending wasn't actually that great. And companies, they used to tend to invest in workers, but it was more the low-skilled, low-paid workers that didn't really invest in training and stuff like that. So I think, as Pierre was saying, it's not only about, getting the new technology. It's also about finding the right staff, training them, and pretty much, also trying to keep them, actually, because they will have the knowledge at some point. And, it's also about staff retention and, the knowledge of all of that. Yeah. So it's quite a big thing.
Again, the hour that we were allotted here has just run away very quickly. There was one further question that came in on blockchain, around whether blockchain is going to accelerate the emergence of multi-user facilities. To whoever asked that question, I'm going to defer that to this afternoon's session on technology, because we have got some experts joining us, and I know that blockchain is going to be discussed in that forum. Is there anyone with a question that I haven't been able to get up on through the Slido technology that wants to go with the final question from the floor? No, well, that's all good. In which case, we'll finish bang on time, and I'll ask you. Well, first of all, I'll thank you for putting your questions forward. I'll remind you that the next session is starting here at 12:30. Logistics is the new retail. We'll be picking up on some of those themes, going into the next level of detail in terms of our great logistics industry. And finally, will you please join me in thanking Pierre and Oliver for sharing their wisdom with us this morning. Thank you very much indeed.
Thank you.